Welcome to the Cattle Talk Podcast, your weekly breakdown of cattle market fundamentals, key news, and the insights shaping the industry. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
Well, today is July 10th, Friday, and I'm Jaden Houselag here, stepping in for Mike Miner, and I got Jace Crocked with me. How you doing, Jace?
Pretty good.
Just a reminder to everyone, check out the description there in our comments to sign up for our daily market commentary. But today, Jace, we're going to be talking about cattle. So, Jace, what can you tell me what kind of went on in the cattle market this week?
Yeah, so we've seen futures heading lower for a while here. We've got we've had about 10 days in a row where it's just red by a little bit, and the market's not oversold. It's lost some of its volatility. It's just on a March lower, which we haven't seen in a long time. Like, you can go back to the lows from even June, and we chopped around to get there. And this time it's just been methodically lower. And yeah, like I said, on the indicators, it's not oversold, but we've just, on the cash side, we've just kind of lost our leverage a little bit. So we went from 255 last week to 248 this week in the cash market. Just seeing that soften up a bit, and just I kind of did this as a reminder to myself more than anything, but I was thinking about leverage a little bit, and these packers here, and they've cut back on hours, so they could increase that and increase their kills again if they wanted to. But we've seen the Tyson plant in Lexington. We've seen the JBS plant in Pennsylvania. We've seen now the two plants in Colorado that have had labor issues, and like Fort Morgan is still down. So just even for figuring a little conservatively, you'd be close to that 10,000 a day mark of lost harvest there. And so it is starting to add up, and I think we're starting to see it become a little evident on the cash.
For sure, Jace. Yeah, seeing a $7 lower cash week over week there. What do you think about box beef? Kind of seeing just a seasonal decline there, or what are we seeing there?
Yeah, it's definitely seasonal. The one piece of it that we didn't get this year is we didn't get that seasonal bump higher into June. And so we're heading seasonally lower after counter seasonally just being flat. So that was a little bit of a disappointment to the market. I think you were anticipating having beef sales higher again this year, and you're just not quite seeing it.
And it looks like we kind of have some resistance around that $400 level there. It looks like, that's kind of been the top over the past year here as well.
Yeah, it's definitely struggled to get above 400, and it definitely matters where that is from an import standpoint too.
Right, Jason. And year over year, like what are we looking like on beef production with these lower kills but yet higher weights?
Yeah, so that has got really interesting over the past, say, 4 or 5 weeks. It's gone from being quite a bit lower. We were running 3-4% lower on our beef production to now, like last week was 99.5% of what it was a year ago. So we are seeing that creep up and getting really close to a year ago, and then imports on top of that. Imports are quite a bit higher by about 5% of our production. So we're seeing, and this contributes kind of to that beef cutout number, but we're seeing more beef available to the U.S. consumer right now. So the demand's still there. It's just there is actually, contrary to what people think about the small beef herd and everything, there's actually more beef available to the consumer right now.
And our basis levels for farmers kind of playing in role for that for guys pushing cattle, to the packer sooner maybe than normal?
Yeah, I don't know that many guys are pulling ahead just because this market has definitely lulled people to sleep on that. But if you were a basis seller this week, to get a positive $13 basis works just fine. So I think, if you're hedged, it's really not. It's not a terrible situation this week, even with the lower cash.
How about on the feeder cattle side of things there, Jason? I look at the August chart, call it 10 of the last 11 trading days, we've been red, bringing August down to 354. What are we seeing on the sales side of things there?
Yeah, that feeder market, like it doesn't have to care a whole lot for the next month and a half, but it is pretty impressive. Last year we were running $9 to $10 above the index with the futures, and this year with an index in the low 370s, we're seeing a discount of close to $20 there. So it's very, very interesting that they're pricing that discount in. And maybe more intriguing is just why guys are willing to spend $4 on feeders and just keep buying them. But this market's proved to be a bullish market. So what we did see this week, we saw Bassett had a sale on, I think it was Tuesday or Wednesday, where they brought an average of 401. So I mean, there's a lot of 250 break even cattle getting placed right now against a board that's mid 220s to 230, and that's going to be a little bit of a struggle.
Right, Jason. And for any producers out there that are buying these high priced cattle and looking out in the deferreds and the fat cattle months, is there any strategies you're really looking at to help maybe ensure some profitability or maybe not lose so much going forward?
Definitely. It's more one of those things that we feel like we're getting closer to the end of the cycle than the beginning, and feels like we need to be protecting a break even more aggressively than we had been in the past. So the insurance products that offer basis protection, they're very favorable, and they can help soften the blow, or at least keep things together for the next while here, and hopefully the next turn can come into some profitability.
Well, sure, Jace. Well, thanks for all of your info today. If anyone has any questions, please feel free to reach out to us here at ProAg, and we can go through some scenarios for you guys. Thanks for watching.